Okay.
Dear colleagues, welcome at our traditional open research seminar. And today we are very proud to host the seminar with Etibar Jafarov, Senior Economist of the IMF, who will talk about the importance of the communication, importance of increasing the transparency of the central bank and its impact on the market participants, the expectation, and so on. So, Etibar, please, floor is yours.
Thank you. Thank you for the invitation. I'm Etibar Jafarov from the Western Hemisphere Department of the IMF. I'm very glad to be here, and I thank the Central Bank of Ukraine for inviting me to the seminar starting from tomorrow and to this seminar today. And today, as was told, I will talk to you about how central banks can communicate effectively based on the experience of 20 inflation targeting central banks. The focus of our study was about experience of Latin American central banks. But as I mentioned, the coverage was global, 20 inflation targeting countries from all over the world. Central bank communication has evolved over time quite a lot. A few decades ago, central banks tended to be rather secretive institutions. They would say as little as possible and say it cryptically. It was because many economists at that time believed that only unexpected money matters and that central banks needed to create surprises for the monetary policy to be effective. But that changed a lot in the 1990s, when central banks started making more efforts to control inflation. And many adopted an inflation targeting framework where it's very important to manage expectations of market players. Maybe we can briefly discuss why it is important to manage expectations of market players. On markets, market participants, they borrow, lend for short-term, medium-term, long-term. The central bank really does not control medium and long-term interest rates. What they control is their policy rate for overnight. They try to influence those decisions of private agents for medium and long term through their decisions for short term. In fact, medium and long term interest rates can be thought as expectations of sequence of short term decisions. And central banks, of course, they are more influential in the short term, but they also try to influence medium and long-term decisions of private agents, which are more important because that's, when investors make decisions, they don't make it for overnight or next few weeks. They make decisions for a few years forward. They have to know what to expect in the next 3-5 years, more or less. Of course, they cannot project it precisely, but they have to have some idea. And central banks, in addition to this short-term policy tool, they try to influence those medium and long-term decisions by private agents by communicating. They try to give direction. So that could guide this private sector agents when they make their decisions. And that's why communication is very important for inflation targeting central banks. And that's why it became a very important tool in their toolkit, central banks. In this presentation, I will try to convince you that open and clear communication reduces policy uncertainty and increasing the predictability and credibility of monetary policy. And with higher predictability of monetary policy, then potential costs of monetary policy decisions become less. Because when central banks either increase or reduce their interest rates, if they are predicted well by market participants, there will be less cost for them because they will be prepared. They know what to expect. They know when central banks discuss the past, what happened, the outlook, what they expect to happen, and then private sector agents know their policy reaction function well. They know what to expect. This is the outlook, and we know that how central banks would react to certain possibilities. They make decisions, informed decisions. And that reduces costs for them, for the society as well. Now, higher credibility in turn, it allows central banks to be flexible when responding to shocks. It's very easy for central banks to respond to shocks that move inflation and growth in the same direction, as usually happens on the demand shocks. Okay, demand increased, growth is high, inflationary pressure is high, it's very easy. We make decision to increase the policy rate. And the other way around. Demand is declining, inflationary pressure is declining, we make a decision to reduce the policy rate. But how should they respond when supply shocks happen, which usually push inflation and growth in opposite directions? Should they, for example, to give you an example, in an oil exporting country like Colombia, or commodity-rich countries like Brazil or Peru, Mexico, how they should respond, where terms of trade, they get negative terms of trade shocks. Should they exchange rate usually depreciates under those conditions, pushing inflation above the central bank's target, while growth is weak. Should they increase the interest rate to contain inflationary pressure, to bring it closer to their target, and thus aggravating adverse effects of adverse growth effects of those shocks? Or should they reduce the interest rate to support growth, economic activity, but risk of higher inflation and risk of losing the public's confidence in their ability to deliver price stability? And they experienced such a shock in 2014 and 16. As I said, the focus is on Latin American countries, the so-called LA5 countries, which include Brazil, Colombia, Chile, Peru, and Mexico. When they experienced large negative terms of trade shocks, which pushed inflation above their target, and economic growth weakened. And the central banks in that region, they responded in two different ways. As you can see here, there were negative output gaps in all countries. Negative output gaps. But some central banks, they did not increase the interest rate in a significant way, and some even reduced, like Chile, that was Peru, which did not increase, and some other central banks increased the policy rate. Why? They they increased the policy rate was to contain inflationary pressure, secondary effects of inflation. What happened? These commodity shocks triggered very large depreciations. And these depreciations pushed inflation above their target. And to contain inflationary pressure, central banks in Brazil, Colombia, and Mexico increased the policy rate, despite the fact that they have negative output gap, which aggravated adverse effects of those shocks, while here domestic demand slowly adjusted. We argue that what determined their response here was how credible those central banks were before these shocks happened. Here, from this chart, you can see absolute deviation of medium-term inflation expectations from target before the shocks happened. This is during already the shock. As you can see, in Brazil, Mexico, Peru, and Colombia, inflation expectations were above the central bank's target before shocks happened. So there were some credibility issues there already before the shocks occurred. There were deviations. And that's why they had to respond in an aggressive way here to contain inflationary pressure. While in Chile, inflation expectations were at the target. This is taken from survey, Bloomberg survey. This is actually regular surveys for central banks, which they collect, like 2-year projections, how they deviate from the inflation target. Of course, we also calculated this absolute deviation of medium-term inflation expectation from target, also from using financial indicators, which in our paper, there is a box on that. If you are interested, you can go there, but they show a similar picture. Now, if the credibility of central banks determine how they respond to these shocks, what they should do to increase credibility. There's a large literature which shows that central banks delivering price stability over time brings credibility. We argue that open and clear communication can help. You see, here we show transparency index for central banks for a few central banks. This is from Dinger and Eichengreen, 2014 paper. And the region's central banks, as you can see, they have lower transparency scores, usually, mostly, well, except for Chile and Peru. Despite very large progress achieved actually in the last decade, they have made, well, these central banks have an inflation targeting framework, they publish monetary policy reports, they, except for Chile, they publish minutes, and there are press conferences, there are parliamentary hearings, but they are still behind. In some cases, it's for operational, actually, their procedures. For example, their projection framework is not assessed by peer reviewers, for example, for these countries. Now, here we show size of monetary policy surprises. This is from Bloomberg. Basically, surveys taken one day before decisions are made, and the difference with the decision. As you can see, for our central banks, Brazil, Colombia, Mexico, Peru, there are quite large surprises. Both the actual frequency and the size are large. There are frequent surprises and they are relatively large, which means there's a predictability issue here. Markets cannot predict well what they will decide. And this is related to, this is related to this lower transparency, we argue. So we do an analysis of, to analyze cumulative response to a 20% decline in the terms of trade in 20 inflation targeting economies for 2000 and 2017 using vector autoregression vector autoregressions. As you can see here, inflation expectation gaps, which were discussed, they widen for less transparent central banks when the shock happens. When shocks happen, for less transparent central banks, this inflation expectation gap widens. They were already wide to start with, but it even widens further. For other countries, they are broadly stable for more transparent countries. Moreover, for less transparent banks, when they respond to these shocks, they take aggressive decisions, like as we briefly discussed, like in Brazil, Colombia, and Mexico, to contain those inflationary pressure. This chart shows increasing policy rate necessary to reduce inflation by 1 percentage point. For less transparent banks, they need to make more aggressive efforts. And this chart shows domestic demand in response to those shocks. As you can see, for less transparent banks, the adverse effect on domestic demand is larger. When they are less transparent, there's large negative impact on domestic demand. So trade-offs become worse for less credible banks, for less transparent banks. We actually repeat these charts for credibility as well. They show similar picture. For less credible banks, there is more inflation widening expectation gaps. They have to make more aggressive decisions to reduce inflation, and the impact on growth and domestic demand is worse. Then we try to analyze central bank documents. We didn't do it for parliamentary hearings, we just did it for press releases and minutes and monetary policy reports, mainly for minutes and press releases. This chart shows central bank the lengths of press releases of those central banks. You can see between 2013-15 and 2016-17, there are three significant increases. One is Brazil, and then Jamaica, And these are welcome increases. What happened? Basically, they were not providing a lot of information before. They were just saying, our monetary policy committee got together and they made a decision to reduce the policy rate by 0.5 percentage point or whatever. So they started providing more information. These are average word count, you see. It was really less than 100 for these two central banks before. They increased it, and this is welcome, of course. Now they are providing more information. Now, for the Central Bank of Mexico, they had the longest press releases, and they increased it. It happened in 2016-17, when first when oil prices declined in response, they increased that. But then also when political change in the U.S. affected them quite a bit, and they started explaining more here. Now we will discuss whether it's a good thing. More words is always good or not. Well, now I can say that actually more words is not always good. An important thing is readability. If people, private sector agents, market participants understand central bank communication. Readability, we make an index using some methodology, taking into account how many sentences per paragraphs are there, how many words per paragraph are there, and how many syllables, etc. Again, for details, you may want to read the paper, but this, for example, diamonds, black diamonds, they show the easiness of materials in local newspapers. They're supposed to be easier to read. You can see in Colombia and Chile, actually, this is central bank communications are close to that level when you build an index for their press releases, and also for Peru. It means their language is relatively easy to the level of local newspaper. People, it's more accessible. But for Mexico, you can't say that. So more words is not always, makes the text readable. It can confuse people. The same thing here for Brazil, although here we use English, but here we use Spanish. I had a colleague, Spanish speaking. I speak some Spanish myself, but one of the co-authors is Spanish speaking. Of course, we relied on his knowledge of the language. But we used here for Brazil English press releases. And the language is quite difficult compared to local newspapers. And also, this is Trinidad and Tobago, and this is Jamaica, English-speaking countries. So it's not always accessible. More words do not always mean that people understand the situation better. It's not just the quantity of information that central banks communicate. It's also how they communicate. Continuing the same topic. Here we show correlation between text length and readability. As you can see, well, there's positive correlation for these countries here, but there's negative correlation here between text length and readability for Peru, Mexico, and Brazil, meaning that longer texts not always are easy to read. Is not is not helping a lot when you add more words. And this is, here we show, this is Readability Index, Flash Readability Index, and monetary policy forecast errors. You remember before, we briefly discussed, one day before the decisions are made, Bloomberg takes surveys, and then the decisions are made, those differences we take as forecast errors, monetary policy forecast errors. There is negative correlation between readability index and monetary policy forecast errors. When texts are not easily readable, when it's not accessible, it causes forecast errors. It confuses people, market participants. Well, we analyze the structure of central bank communications. Here we are analyzing the substance of their communication. Specifically, we look whether they provide forward guidance. Remember, we briefly discussed that central banks try to influence medium and long-term interest rates and market prices by communicating, by providing forward guidance. If you actually compare with advanced economies, for example, just maybe we should make that comparison. When in advanced economies at zero lower bound, the central banks cannot reduce their policy rate well into negative territories, as in some countries, and in some countries they don't want to reduce below 0%. But what they do, they try to communicate to the markets that we will keep these low interest rates for next 3 months, 6 months, or 1 year. They are providing forward guidance. In case of Chile, here, in every second their press releases, they provide biases, tightening or easing biases. For this coming period, we have easing bias or tightening bias. And that is quite powerful communication. That is quite influential, as I will demonstrate a bit later. But as you can see, in these countries, there is less forward guidance. This is in percent of total press releases. In Chile, it's almost like every second, while in Peru, Trinidad and Tobago, and Colombia, it's less than 20%, and Mexico.
May I clarify here? When you talk about providing forward guidance, how do you assess this percentage? Because, for example, in our press releases, what we do, we provide, sometimes we provide more hawkish signals, sometimes we provide more dovish signals, but sometimes we state that the balance of risks is more or less equal, and our next move could be in any way, something like that. Yeah. So, and in that case, so the third case is considered like the press release without bias, or
no? In case of Chile, there are specific there's specific language biases. Like we have easing or tightening bias. There is like mentioning that. Now, the tone I will discuss, it may be clear after this slides. Maybe we can discuss it further if needed. Now, we also analyzed to see, in this chart, you can see effect of unanticipated increase in policy rate on break-even inflation for 2011 and 17 for these countries, our countries here. As you can see, actually, effect of policy change itself plays very limited role. effect of guidance plays more role, actually. This communication that we will use or type, the tone. We'll discuss that tone index in this one. We build also a tone index in their communications for both press releases and minutes. What we do, we use the latent tricklet allocation methodology to identify the topic. For example, if it's domestic demand or foreign demand, etc. And then for each word, we calculate how many hawkish words and how many dovish words are there. For example, in this sentence, household spending is expanding at a moderate rate but remains constrained by a weak labor market and modest income growth. We define, like as authors, what constitute hawkish words and dovish words. There may be some subjectivity in that sense. So please bear that in mind. But we take expanding as a hawkish word, one hawkish word in this 13 words, and we ignore this, at, and, etc., these kind of words in the counting, when we count these words. So there is one hawkish word, expanding. Then 3, moderate, one dovish word. A weak labor market, weak, second dovish word. And modest income growth, third dovish word. 1 minus 3 is minus 2 over 13 words. That's our score for this sentence. Then we aggregate it for the whole text and normalize it. Then calculate whatever index for that central bank for that period. We do it for all 20 central banks. And then we compare this tone index with the central bank's future policy decisions to see if they actually back up their words. Do they back up their words? They said, well, we are hawkish. We will increase our interest, meaning that we will increase our interest rates. Did in fact they increase the interest rate? That we analyze in this chart, it just shows simple correlation between that tone index and change in future policy rates 1 month ahead. This is for minutes, and this is gray for press releases. As you can see, in Chile, Colombia, and Mexico, they back up their words. In Peru, they don't issue minutes. So we couldn't calculate minutes. But in all banks, they back up their words with their future decisions, which is a good thing. You are building credibility. You say that I will be hawkish, and you become hawkish next time when you make decisions. And moreover, which I don't show on these slides, but we made that analysis, we run also regressions, both taking into account policy decisions itself and then tone index. And it turns out that actually the tone index can have an impact beyond this policy decisions themselves. And here we show how markets react to this central bank tone. Hawkishness, dovishness, these indicators. Here, in those regressions that I mentioned, the left side variables are market prices for financial indicators. And the right side variables are policy rate changes and the tone index. You can see those two can still significantly explain movements on markets. Remember, it's for 1 day. Even though they may look small to you. They are not small because you are explaining one-day movement. So if you aggregate for the many more, then you would get more like R squared. So as you can see for Chile, this tone index actually can explain not only 3-month swap rates, 1-year bond yields and 5-year bond yields. They influence medium and long-term instrument prices, which makes monetary policy very powerful. Because it's not just your decision today, you are influencing medium and forward rates. If you do for minutes, you see for Brazil, it's more important. In case of Chile, it's less influential compared to press releases. This is in part because minutes, they come with delays. There's quite a bit of information here already. Since press releases contain a lot of information, minutes get less attention by the public. And in Brazil, the other way around. You remember I told you that they actually, their press releases originally didn't contain a lot of words, essentially saying that we made that decision. For them, minutes are more powerful because that contain information. Well, the main takeaways from this analysis is that the credibility of a central bank provides a greater room to maneuver for interest rate policy in the face of inflation shocks, and thus allows to better manage adverse shocks. As I mentioned, when you, for example, face supply shocks which push inflation and growth in opposite directions, credible banks have better trade-offs. They don't need to aggressively increase interest rates when there is inflationary pressure but growth is weak. They just go to the public and explain that this is a transitory phenomenon. And they, as in Chile, and that they expect inflation to converge to their target over the medium term. And that that's good enough. The public believes that. But for less credible banks, they have to aggressively increase interest rates to keep their credibility and increase the credibility. And we find evidence of strong relationship between credibility and transparency and open and clear communication. Central banks in Latin American region are at different stages of development in their transparency frameworks and communication strategies. Some are well behind advanced central banks, like Czech Republic, New Zealand, Swedish Riksbank, etc. What it means, there are good and bad things about that, right? The good thing is, the bad thing is that, okay, they are behind, they need to do a lot of work, but the good thing is that they have actually room to improve, and there is scope for increasing their credibility. And more credibility will allow them more flexibility when responding to adverse shocks. Then our analysis, as I discussed, showed that markets listen to the central bank. The tone of central bank communication affects market rates. This can enhance the effectiveness of the monetary policy. It makes the monetary policy more effective, more powerful, because the public listens. Effective communication strategies not only depend on what type of information central banks publish, but also how this information is communicated to the general public. Central banks that communicate clearly and unambiguously tend to be among the most predictable. As we discussed, more predictability means that there are less costs to the society, to the public, when there are changes in the policy, in interest rates. And explicit policy guidance, like easing or tightening bias, considerably improves the transmission of policy rates, making monetary policy more effective. And from our analysis of those central banks, we come up with a few measures which could enhance the transparency framework. These include fill current data gaps by increasing the horizon of expectation surveys, because they take usually surveys for short period in most of these countries. We were saying that extend the horizon for that. Then consider publishing the votes and comments of individual members. Not all central banks do that. And then for some central banks, publish minutes of the policy meetings, like Peru, for example. Although they have high transparency score, but they could also benefit from publishing minutes, because there is information there, as we discussed, which affect market rates. And reduce the lag in the publication of the minutes. Because if you publish it, 3 months later, it will not be relevant anymore. But if you do it within a week or 2 weeks, that still will contain some information. Well, thank you.
Thank you very much. I suppose your presentation provides us very useful insights how to measure effectiveness of the communications and monetary policy. Very hot topic here. Yeah, we discussed it internally a lot, and I suppose we will definitely use your approach, your materials you presented. I have a few questions, but maybe first I will provide floor to my colleagues, and we'll step in later. So, yes.
Very interesting. I have small comments also and couple of questions. Comments is about the very interesting comparison of the Chile and other countries. Of course, you are right, absolutely. The more effective monetary policy and more entering expectation in Chile provides the Central Bank of Chile more room for influence of interest rate. Very nice graph, and interest rate is during the shock is only Chile have the negative. They allow to support the growth without the risk of inflation, price stability. But its picture, it's not full picture. We could be also added the supply from the real sector economy, because Chile have very high level of structural reforms compared with the other Latin American countries, inflation target. This allows the also central bank monetary policy will be more effective because more good transmission mechanism, and also the economy more, persist against the shocks. This is complex of the as from monetary policy, as from real sector. This could be. And also is very easy to say that Chile achieves a more rational expectation in terms of than other countries. This allows to central bank manage the interest rate without the credibility is other words. Rational expectation allow to manage better without the trade-off between the output and inflation. And question is interesting graph about the index. No, it's more technical, but for us may be interesting. Readiness, how to measure the readiness of the index readiness, readiness index.
Readability.
Yeah. Credibility. Readability. Yeah. It's survey or how to measure. And second also, how to measure the influence of minutes and press release. It's also survey or measurement of the minutes, influence of the minutes to the expectation and the influence of the press release. Two graphs about the Brazil is more influential as press release, and Chile more influential, vice versa. How to measure this?
Oh, okay. Well, it's true that, you know, starting from the first question, more structural reforms and the fact that they are at a bit advantageous, advanced stage of their development in Chile helps, but it's also the credibility gained from years of prudent monetary policy that makes the monetary policy more credible. The fact that in the past, when these shocks happened, they responded accordingly. When you have deviation from the target for extended periods, and when you don't respond, that would reduce the credibility. And in Chile, the central bank has been prudent, has responded for many years, where they did not allow those expectations to deviate from the target for an extended period, on top of structural reforms, etc. They both play a role. Now, yes?
Before you come to the next questions of the Alexander, may I continue this topic, because actually I have the same concern raised by Alexander about the third factors which actually can have impact on this reaction of the central banks on the terms of trade shocks. Because from my point of view, also definitely the transparency of the bank and its credibility to its monetary policy matters. But at the same time, I'm sure that some economic structure factors or like dollarization factors also matter. Yeah, and in that regard, when you made this regression, did you try to impose some control factors in order to investigate I would say, the clear link between the transparency, predictability, and the reaction of the central banks?
No, we did not control, but just for your information, for example, actually dollarization ratios are not very high in Brazil. But still you see the same picture. They may be a little bit high in Peru, for example, around 30–40%, less than Ukraine, but significant, 30–40%. But less than actually, much less than in some other countries in the region. But in Brazil, there is not high dollarization. You still see that issue. So we did not control, but we are aware of that issue. Yes, and that's true that the structure of the economy also affects, on top of this, financial dollarization ratios, etc. Some countries have more commodity reliance on commodity production of oil, agriculture, etc. Some countries are more exposed to these problems than the others. We are aware, but in our regressions, we did not control for that. But remember, our R squared, it's enough, basically, there is enough explanatory power there for us to make these judgments. R squared may not be very high, but again, we are not trying to make precise predictions about the future where you need R squared and control for other factors, that would make your projections more reliable. But if you do it for the future, because uncertainty for each time lag you are adding to your forecast will increase. But we are not in that business. We are trying to explain what happened up to now, and we are trying to make references for the future. We are not making projections. So not very high R squared is not important, but there is enough explanatory power in those regressions. Thank you. Okay. Now, more rational expectations, yeah, there may be more rational expectations in Chile, but more rational expectations, they don't come on their own. It's gained over time. Remember, actually, let me briefly mention one thing. Communication would not matter if the environment is stable, economic environment is stable. Everyone has access to the same information. And expectations are rational. And everyone knows central bank's policy reaction function. Then you don't need communication. Then people will make their judgment. Communication is important when there is a lot of dynamism things move up and down. It's not very easy to predict future, to make focus when investors make decisions. And not everyone has access to the same information, which is closer to reality. Not all people have the same information as the central bank. And that's why guidance, communication becomes more important. And over time, yes, agents will become more rational, but they will be also more informed, because in central bank of in Chile, because central banks would put a lot of information, including its forward guidance, on the table. Then it's very easy for markets to become more rational. When I say that I will become, my monetary policy has an easing bias next time, I don't expect it to go up unless something happens. But if something happens, then I take into account how the central bank would react, and I discount that factor in my decision, which makes it's basically a cycle, which it's gained over time, that more rational expectations. That's our argument, that open and clear communication helps it to develop over time. Readability Index, as I said, in a way it's very simple once you know it is mechanics. It's just counting words per sentences over paragraphs, how many verbs and nouns are there versus adjectives. More adjectives, for example, make sentences like, going back, a bit difficult to understand. For example, in this sentence, when we say the economy is expanding, if we stop there, it's very clear, it's expanding. When we start adjectives, moderate, weak, etc., this makes sentences more complex. More information, but more complex, basically creating, the longer sentences mean you are confusing people. How it is built, that index. So basically, it's built in such a way that easy language should be like shorter sentences, nouns, verbs, less adjectives, in that way. And fewer sentences in paragraphs.
For you, it's more easy, it's short. But for example, it's better to know the feedback of the people who read, like financial analysts or the business. They could be assess the quality of the and readiness of this. Yeah. Not only IMF expert.
Yeah, exactly. Actually, and not only for financial experts. Because, in fact, this kind of literature, including ours, heavily focuses on this financial sector response, etc., because that's what we can measure. But what matters most is the public in general. How these workers from companies, they will react. Will they run to banks to get their hryvnia to convert to dollars or vice versa when they get their communication? For example, that's what matters, right? Public in general. That's for future, I guess, because we had to make, we had to keep it feasible because there is not enough information on that one. We couldn't do an analysis for that purpose, but in general, the purpose of communication, it should be beyond just financial sector. For financial sector guys, you don't have to be very simple because they will get it. More or less, they will understand it. Probably experienced journalists, experienced financial sector experts, they will immediately understand what is contained. But you have to take into account the public in general. There is a nice paper by Mr. Haldane of the Central Bank of England, which discusses those issues. I like that paper a lot, and I would recommend, like, it's an easy reading, relatively easy reading, so which discusses that topic. And which one? Measurement of minutes and press releases. You mean the tone index? The tone index we briefly discussed. It's again here, at the end of the day, what we are doing, we are counting hawkish versus dovish words. We take that difference and we say this text is hawkish. Central bank sends signals that it will increase policy rate because there are a lot of hawkish words. Things are increasing, economy is accelerating, etc. But when we see a lot of dovish words, we get signals that it will reduce interest rates in the future. That's how it is built. Well, beyond mechanics, in simple terms. Yes?
I have a question on your measurement of correlation between sentiment and action of central banks. Yes, this slide.
Yes.
It's just 1 month ahead, but usually decisions on monetary policy taken with, I don't know, 8, 9 times a year, not every month. So maybe it's not the best option to measure it just with 1 month's time lag.
Yeah, but that's true. In fact, we do, again, it's not on slides. We do also regression analysis. And what we do, the left side variable here is future policy rates. 1 month, 3 months, 9 months, and 1 year. We repeat the regressions. It's not even in the paper. We just did it. We did not add it there. But we have done that analysis. The right side variables include market information from the market, like derived from swaps and future rates before press releases and minutes are published. What they are predicting, future rates, swap rates, etc., for 1 month, 3 months, 6 months, 9 months, and 1 year. So we are trying to see what markets were expecting yesterday in their swaps, futures, etc., for next periods, and if the tone index still has explanatory power. And it turns out, yes. And on top of this, policy rate change itself. So 3 together, right? Policy rate, what markets were expecting, and the tone index still was relevant. And we repeated it for possible 1 month, 3 months, 6 months, 9 months, 1 year. In most specifications, not in all specifications and not in all periods. We are talking about on average right here, not like for each case. It's not for each case. It's it has like explanatory power. For some countries, for example, instruments, say 3 months or 9 months, doesn't work. But on average, it still has an explanatory power.
And rather technical question: how do you measure surprises? It's I think on the second slide.
Surprise, which one? For monetary policy forecast surprises. There are surveys taken from market participants by Bloomberg 1 day before the decisions are made. Yesterday, you take surveys. They were expecting 0.25 percentage point increase. It didn't happen today. That's a surprise. Or they did not expect it yesterday. It happened today. That's a surprise too.
Do you take the mean or median of these expectations of the analysis?
Well, it's one variable, right? For forecast errors, it is a variable. It includes just changes. For example, say 0.25 last month, this month 0, next month 0.5 positive, it's a variable. And then you take other variables, tone index, you see, for example, if they are correlated.
No, but again, so coming back to your example, for example, let's take the last survey in Ukraine. Yeah, so approximately 5 analysts out of 10. So they expected the cut, and the other 5 they expected the rate to be on hold. So
I believe it's average we used because it's for countries. Yes. Anyway, it's not like one by one. No. Yes. But that also could contain information, that variable itself, because say you are taking average, but distribution of that, like from the average, could contain information as well. We looked into that, but again, they are not in the paper.
Yeah. That's also important because sometimes, especially here, we have diversion of the expectations of the analysts by themselves. That matters. But actually, my question was, you try to measure the tone of the minutes of the press release and so on, and to test its predictive power. Yeah. But have you tried to do the same with the decompositions, with the decomposition of the votes of MPC members, of board members? Does it matter for the markets to predict the decision?
We did not run regressions for that, but it's an interesting idea. Yeah, it might. Probably, because that's the whole idea, right? Tone index, in a way, you are trying, because that's exactly similarity, parallels.
Yeah,
but we didn't do that. So
because again, I'm asking because, for example, we consider that in our minutes, so the most important information actually that is the breakdown of the votes.
Yes.
So, but of course, the tone of the messages, the tone of the discussion, during the MPC also matters. But again, so I would
add that information. No, that's a valid point. Yes. Yes, please. That could be done separately. You could do it.
Okay, thank you for your presentation. I should say that, let's say, half of the year ago, I've got your paper from Regional Outlook, and it was very great influence on me because it was like discovering of new topics of central bank researchers, and it is a very big pleasure to see the personal presentation. So my question is not about technical details, but mostly to the question about conflicts between deviation from the target and, let's say, financial cycle pressures. If you can to show the graphs with the output gaps and differences across the countries. So this, yes, thank you. How do you think, is it possible to explain the big differences, not only from the differences from transparency point of view, but also from the fiscal framework side, let's say fiscal stance side, or financial pressure across the countries? Let's say, if I don't know, the Brazil met very strong capital inflow in that period, and the real was under the strong appreciation pressure. That effect slowed down in Brazil, something like that.
We did not control, but of course we are from the Western Hemisphere department, and we know what's happening in each country. Broadly, no, we did not control for those, but they are again relevant points. If you want to have more explanatory power, etc., in your regressions, you could add them. But we did not think was needed. In terms of fiscal, usually these things happen actually in parallel. What happens, for example, these are commodity exporting countries, right? Colombia, say. If oil prices decline, they lose oil revenues. So they get, like, on top of monetary policy effects, they get like fiscal deficit gaining unless they have like impulses on top of what's happening. Like, you know, naturally what you would expect, deficit would widen, but they might even widen it further if they think they need to support economic activity. We did not control for that, but broadly, we didn't think it was needed, again, judging from our own knowledge. This was pure, like, monetary paper. Really.
Okay.
But it's possible that monetary policy in some countries is dominated by the fiscal policy, so which makes the life very difficult for the central bank. If you have very large fiscal deficits and expanding, then it's hard for central banks just to counter that with interest rate decisions, because they just get dominated by the fiscal policy.
While you compare on the Ukrainian text, for example, and the English translation, you will see that the English translation is much shorter. It's not because we're hiding something, but because the different structure of the language. So have you tried to took into account such differences in the languages while you're comparing the Spanish language and English and other languages?
Not formally in our regressions, but we try to be mindful of that, yes. Like, for example, in Brazil, it's Portuguese language. In Trinidad and Tobago and Jamaica, it's English. And the other countries are Spanish. So they are not strictly saying that you should not really compare them, but when you are doing cross-country analysis for 20 inflation targeting central banks, we couldn't do it for Czech language or, say, Thai language and other central banks. We had to take English ones for those central banks. But I see that issue, yes. Portuguese especially could be like long. Even Spanish compared to English is a long document. Usually you see it like, you know, Russian and English, when you see, for example. Usually those documents in Russian are longer and more convoluted a little bit, longer sentences, etc. but I guess it's very difficult to control for that when you are doing cross-country analysis. But we are, again, we are aware, we tried not to go over the board when we make these comparisons. But in our case, for example, those 4 central banks, Chile, Colombia, Peru, and Mexico, they are Spanish-speaking countries. For them, we took Spanish.
Have you any question? No? Okay. Then let me, on behalf of the National Bank of Ukraine and all attendees of this seminar, to thank Dr. Jafarov for the great presentation and for fruitful discussion. I also thank all attendees for your questions, and thank you for this presentation, and hope to see you participating in our conference tomorrow.
Oh.
And I hope for our cooperation in future. So
thank you. Thank you for coming. And thank you for the invitation for both seminars.
You're welcome.
And I heard, actually, I talked to your colleagues before the seminar that a lot of efforts have been made at this bank to improve communication, to improve monetary policy framework. And it was encouraging to see, actually, I saw a few charts that those measures taken, they were bringing yields, and there were some improvements.
Okay.
I wish you good luck in your
Thank you.
endeavors, and sure,
We will do
I'll be
our
happy
best.
to cooperate.
okay, thank you very much. So good luck.